Hi everyone, welcome to this special event. My name is Andrew Kramer. I'm a data scientist at Algonel. Algonel is an algorithmic trading services provider. We do algorithmic FX trading, data mining, and market analysis. Our goal is to integrate computer science principles in the FX market in order to create superior trading algorithms. This is an introduction to FX data mining. In this webinar, I want to show you how easily we can create unique and novel trading models with simple tools. And let's begin with a short introduction to the FX market. So FX, Forex, or the foreign exchange market is the biggest market in terms of daily traded volume. It has three main levels of participants: the big boys, the intermediate level, and simple traders as you and me. It has a speculative nature, which means most of the time we do not exchange goods and we care only for the difference. Our goal is to buy low and sell high, or sell high and buy low, which stands for long and short. In this example, you can see a gain of 100 pips. Notice that in FX it is possible to trade easily both sides, and it's very important to note. And now let's proceed to the data mining. So data mining and machine learning is about a lot of data, and it's about intelligent data processing. It's not just crude, meaning creating, reading, updating, or deleting the data. It's an non-trivial extraction of knowledge from data. And notice that we already got massive amounts of data in the FX, and we need the data mining, the non-trivial extraction of knowledge from the FX market in order to create better trading systems. So data mining, we have several data mining methods. And for example, classification is for classifying an email as a spam or not, classifying a transaction as fraud. Banks and credit companies, PayPal, any uh, wire transfer and stuff, you could easily classify it as a fraud or not. Association rules mining, YouTube suggests us new videos based on our history, and Amazon suggests us more items during checkout. Notice. Process mining is a new subfield of data mining, and it's all about examining logs for finding holes and interesting data. In our case, we could easily examine FX logs from Trading Station or MetaTrader and find knowledge which was hidden. Okay. Text mining is also very important in FX because we've got a lot of news, a lot of technical analysis, and we wish to find interesting patterns, and we wish to know how the news are uh, advancing the markets and making changes. Well, we would like to predict them. So text mining is about intelligent analysis of news. Okay. So machine learning is actually the practical side of data mining. All of the implementations and the algorithms actually doing the job is about machine learning. Neural networks are very known in the FX. Random forests, sadly enough, they are not. Okay. Linear regression is also very famous. It's too simple, but it's well known. Okay. So now let's proceed to algorithmic trading. So algorithmic trading or quantitative investment is some kind of trading algorithm. In our case, the trading algorithms comes from the mining. Okay, it could be Markov hidden model, it could be your greatest trading system, which you just developed manually scanning the graphs. Okay, in our case, we do the data mining in order to create better trading models. And it's all about automated trading with some kind of programming language. It could be a low level or it could be a high level. It doesn't matter. Okay, it's all about your choice. Nowadays, we already got great implementations of a fixed protocol in Java, and we could easily, for instance, trade with Zulu Trade API or MyFXBook or even FXCM. We've got a great implementation of fixed protocol, which is Java based, or you could go low level and use C++ implementation of the fixed protocol, or MQL, MetaQuotes language is a great language. Okay, about the speed and robustness, well, human trader cannot beat the computer. Okay, so there is no psychology and it's deterministic, and it's very important to note that in this case, it's long term rather than HFT, which stands for high frequency trading. In our case, we wish to trade longer periods of time, and we are not talking about milliseconds like in HFT. Now, let's combine data mining and algorithmic trading. Okay, so how we mix the algo with data mining? So the most important thing is the data. The simple principle states that if your data is not good enough, your models will not be good enough. It's ego. It's all about creating a model, implementing it, and testing it as always. Okay? Currently, this flow is mostly manual. So you have to explore and just look for it. Now, let's talk about some data mining software. So, Weka. Weka is a bird, okay? It's unique in New Zealand. Well, Weka is the coolest data mining framework there is. It's Java based. It's got a wonderful Java API. It's open source and it's academia. It has most of the well-known algorithms implemented right away. Okay, so here we've got some links for the software and a great book by the creator, Professor Jan Witten. And now, after presenting the main idea and tools, let's try it. Let's see a live demo of data mining in the FX market and how we can create trading models. So before that, let's take a look on our data. So our data is easily created from standard trading platform as MetaTrader 5. In my example, it's FOREX time. Okay, so I just open a euro dollar graph and I just press Control S and I could easily save the prices wherever I like. Okay, so I save the data and then you can see a time, which stands for the day, hour of entry, open, high, low, close prices, volume. Well, volume is a bit, well, actually, it's artificial because FX brokers don't have yet the actual trading volume, and because of the nature of the FX market, no one can really estimate volume. So this volume is artificial, and it stands for the number of ticks, the number of price changes per period. In this example, it's 8,000 price changes in 1 hour. Okay, so we keep the volume and we could use it as an interesting attribute in our mining. So here you've got several classes, okay? Attributes starting with the class prefix. They stand for class variables which we wish to predict or to classify. So next close price is just an artificial close price which I created from copying those close prices in order to try to predict the next close price. If my trading system, if I could predict the next close price with some probability, well, I could use it for live trading, okay, and it's a good trading system. So we're gonna try to predict the next close. So class price up is just a binary class, which stands for, well, if my current close price was higher than my previous close price, well, I had a price up. And otherwise, I've got the false, which stands for, well, the price went down. Okay. Here we've got a change in pips. It's just a simple difference between the previous and the next close price. And here I try to create a nominal attribute, nominal class variable, which stands for three categories. One for plus 10 pips movement, which stands for, well, the next close price was higher 10 pips above than the previous close. And if it minus 10, it was lower. And if it's ranging, okay, it means it between the minus 10 and the plus 10. Same goes with the minus 25 to plus 25. So let's load it to the Weka. I just use open file. I already loaded my data sample. So let's have a little visualization of my data. Here we've got the class. Notice that the class variable should be removed and only one class variable is about to be used or predicted or classified. In this case, I've got them all. Okay, so time too many values to display. But however, okay, you can see easily the distribution, okay, which hour was the record taken, and we've got here the open, high, low, close distributions of prices and volume. And here we've got, it's very important to know the class pips change. Notice that uh, pip change class looks like a normal distribution, which stands for, well, your price most of the time is ranging. It's just doesn't know what to do. It's very important to know that those tails, well, are rare. Notice. Now let's remove time. Why I want to remove time? Because time is too unique for me, and I don't want to use time in order to predict my next record based on previous day or something like that, because date is unique. Well, this date is unique. It will never come again, and it's useless for me. I remove it. Now let's begin with the class uh, next close. Okay, so I remove only one class variable and I left with class next close. So let's try to predict it using several algorithms. For instance, we can just play with the range of the classification and prediction algorithms I have. Just try them. You can see that we've got an implementation for the linear regression, which is very simple, but yet gives us, well, a wonderful correlation. So this simple model could be used for trading. Notice how easily, okay? And notice that I could copy it and go, to MQL and just paste it, and well, it's a trading system in a few seconds. Also, I've got here a multi-layer perceptron, which is a neural network, of course. And the calculation time may be too long, so let's skip it. Lazy, which stands for lazy classification algorithms. For instance, the IBK, which is an implementation of the nearest neighbors. In our case, it's one, okay, by default. So let's see. Well, we've got a good correlation, a little error, but notice that IBK or K-nearest neighbors in our case is a bit of black box because I don't have the model right away and I have to, calculate the distance manually using the distance provided here. Okay, so it's important to note. And let's proceed to some other classifier. Well, what we've got here. Let's proceed to trees. Okay, so trees, we've got the random forest, which is a bit a black box, but to me is the best classifier there is. It's a great classifier and it's a great predictor. It's the best for nominal classes and numerical classes. And if you want to get some kind of visual model, you could use the random tree, which gives a nice correlation, and also it prints you a simple model. Okay, so we could once again easily copy this to our MQL or Java and just code it in few minutes. Just create trading model out of nothing. Look how simple it is. So let's proceed to another class variable. So once again, I load data, I remove the time, and I left with price up. Okay, so price up is a bit harder because, as we have seen already, the distribution of pips change is normal, which stands for most of the time price is ranging in small movements. So let's try some naive Bayes. Okay, the simplest classifier there is. Well, this classification rate is, well, like a gambling. It's no different than tossing a coin. Let's try something else. Well, the model is very complex, but still the classification rate is low enough. Let's try the lazy and k nearest neighbors. What we've got here, well, the same classification rate, so I see it's not good enough. Let's try to cluster. Okay, so cluster analysis is about creating groups of data which are, well, unpredicted, unknown before, and has some kind of connection in between the groups, and they are very different, the groups one to another. Okay, so let's try simple k-means, which is the simplest clustering algorithms, and it starts with number of clusters for 2, and we could easily visualize assignment, and you can see it's pretty good. Okay, the clustering is pretty good. So notice that those are well, clusters for uh, price entry for short. Okay, because price went down. Okay, and now let's add some spice by using discretization. Okay, so let's try to use the unsupervised discretizer and make 10 beans of a price. You know what? More. Let's add 100 beans and discretize it, and then we could just, try to cluster. Okay, and now we've got ranges, which is very important to note because before it, well, we've got only the prices and it was not no help for me. Okay, now I've got ranges and I can validate easily. Once again, I could copy it and use it in my trading system. Now let's try to create 24 beans. Why 24? Because well, 24 hours. I want to create clusters for each hour of the day to enter my trading. Okay, let's visualize the cluster assignment. Well, it's too hard to understand. Let's lower the number. Well, actually, you could start with 2, 4, 8, and graduate exponentially, but let's go to 8. Okay, and here we've got clusters, and let's see the visualization. Well, it's not clean. Let's try lower, something like 4. Okay, so 4, we've got false, 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 and 1 true, which stands for buy, and those are the short entries. Notice the hours of entry. Okay, it's very important to note. They are the most important. And what about the visualization? Well, it's still not clean enough, but those could be used for trading. It could be tested and it could be used for trading. Let's try another class. Okay, once again, I load the data, I remove the time, and now let's leave only the 25 pips change. Okay, so 25 pips, if I could predict a 25 pips movement, well, I could use it. So let's just discretize once again for 100 bins. And here, let's try to classify once again with the simplest naive base. Well, we've got a 85% of correct classification with the simplest classifier. Let's proceed to something more sophisticated as the random forest. Okay, so random forest gives us 92% of correct classification. Notice that this black box, well, it's hard to use, but you could use J48, which is a standard implementation for the C45, very famous classification tree algorithm, which gives us a simple model. Okay, in this case, it just stands for, well, the model is irrelevant. Look at it. It just has one leaf. So it's very important to check your model. IBK, which stands for K nearest neighbors. Well, this could be used. Okay. And here, once again, we could use maybe random tree. And that's it. That's it. And here you've got a beautiful model. Okay, well, it's gonna take you a while to code, but it's a model which could be used for trading and analysis. So now here is a sample of data loading. And now I want to make a small summary about what we just have seen. So mixture of good tools is vital here. Okay, there are too many possible trading models. And notice that tossing a coin is a stupid trading system, but it is a trading system. It's very important to note. Well, we need data mining to find the gold. Okay, if you use more attributes and you copy several attributes in one record and you make historical movement in your prices, you could use it for creating a superior trading algorithm. Well, good tools are easy to get. Weka is free. Your data is free. You just have to. You just need the time. Okay. So good luck and just explore. So if you want a slice or the sample data, feel free to contact us. Also, please visit algonel.com for more details. Also, you can find us on Twitter, Facebook, Google+, LinkedIn, and WordPress blog. And goodbye. Thank you very much